All right, hey everyone, welcome to your free video. Let's go ahead and take a look at what happened this week. Both of these charts, both on the left-hand side and the right-hand side, one the NASDAQ, two the S&Ps, start out on Monday, and here is an hourly chart on both of those. So on the NASDAQ on the left-hand side, what is interesting here is essentially the volatility and how it's not really going away. So look at these huge moves, 12,000, 11,700. If you zoom in today and just kind of take a look at Friday, the low was 11,800, the high 11,952. But if you take a look at Monday, Tuesday, Wednesday, you have not only this following Monday, and you can kind of see it a little bit better here on the S&Ps, but then you started to try to fill that gap to the upside. And so a couple things happening here. Tech obviously not really leading the way, and today was sluggish. So really interesting Monday, and that really started a tone of, okay, the market's still not going to have a directional bias. I'm still totally happy with just keeping on some butterflies and selling iron condors. Directional movements are difficult. Conservative profit taking is pretty much the only way I can think of to survive that right now. Just remember on the ticks here, this is something here on the left-hand side, super important market internal. We have back and forth, 1,000 ticks, negative 600 ticks. And that was actually, this is kind of a moderate day compared to Monday and Tuesday. So where are we going from here? So what I'm taking a look at is, and this is something that JC will show you, and this is just a kind of an elongated version from February. Here's January 1st on the NASDAQ. Down below in the middle, the put-call ratio. Down at the bottom, the skew. So if you've seen this before, you know kind of what's happening. The 10-period moving average and the put-call ratio is below 1 and declining. The market, we can look at the NASDAQ and the S&P are pretty much going to look the same, right? So huge climb, put-call ratio below 1. Huge dip. This is February going into March. This is your COVID-19. This is, a few other things. Hedge funds start, throwing on shorts hard. They want to start hedging, and there's a situation here because we're so low again, and back then we were so high, and we're still climbing. So the takeaway, look, on a Friday, we're up 125 points on the NASDAQ. That's kind of a conservative update compared to the other, climbs that we've had. So certainly expect a lot more volatility. I think it's interesting that we have some run into earnings situations. We'll be taking a look at that. But overall, I still remain bullish on this market. Seems like, there's not a whole lot of doubt or fear just yet. And right now, it seems like this has been for the about first couple weeks of November. We've been super volatile, but yet somehow either at the end of the day we basically recover, or in the mornings we're gapping up. So stay nimble, stay quick, be careful out there, and we'll see how next week adds up. It won't be dull, and I hope you have a wonderful weekend. We'll see you in the next update.